I am Shivani Mishra, co-founder of ThinkUniQ Solutions. We're a very young organization founded by not so very young founders, but we do come with a lot of years of experience having worked in the industry and in the corporate world. And we're all very passionate and committed to work with organizations and leaders in their DEI journey, and and ensure we make workplaces much more inclusive, by nurturing the uniqueness of every individual. Our services include, consulting, learning development, coaching, engagement, using simulations and mind games. So this is just a little bit about us. Please do feel free to follow us on LinkedIn as well. With me today is our co-founder and speaker, Sangeeta Shankaran Sumesh. She brings in over 25 years of experience, rich corporate experience, having worked with multinationals, and her last assignment being as an executive director and CFO of Dun & Bradstreet Technologies. By education, Sangeeta is a chartered accountant. She's done her executive education from Harvard and is a PCC coach from ICF. The list does not end here. She is also a best-selling author and has almost 5 books to her credit. And she's also a TEDx and a professional speaker at many national and international events, forums, corporates, and she speaks on topics ranging from finance, diversity, inclusion, leadership, or high performance teams. So I think it's absolutely a delight to have her here with us today. She believes in value creation for her clients and is also an independent director in IFP Industries Limited. So without wasting more time, I think I will pass on the session to Sangeeta to take it forward from here. For everybody attending, please feel free to use the chat window to share your thoughts, to share your questions, because we will ensure that we've got 10 to 15 minutes in the end to address any questions, queries that you might have. Over to you, Sangeeta.
Thank you so much, Shivani, for the lovely introduction, and a very warm welcome to all the lovely and awesome participants. So how are you all doing today? I would like to make this as interactive as possible. So I would really be thrilled if you guys can communicate with me in the chat box. So are you ready, guys? Just give me a thumbs up or just say hello. Yes, yes, I love that. I love that. Yes, yes. Oh, there's somebody else pinging me saying they haven't received the link. This is quite strange. So just to give me a moment while I share it to them so that others can come. We've actually had over 100 registrations and we are quite surprised that not many have received the link, which is, that's how the tech world is. So welcome to the tech world. And yes, thank you all. I love your energy. So keep them coming. And it's a delight. And once again, a warm welcome to all of you on this exclusive session called Talent-O-Nomics, exclusively for the HR professionals. So like you know, I'm the co-founder of ThinkUniQ and I'm a chartered accountant like Shivani said. So all I think is numbers. So I said, it'll be great if I could share this knowledge with all you wonderful HR folks so that you could also start thinking numbers in the amazing roles that you all are doing, right? So that is what is the intro for today's session. Right. So before we deep dive into Talent-O-Nomics, so let me share a wee bit of how the session is going to be. Like I said, I want this to be as interactive as it can be because I can't see you all. It's not a live session, but I love your energy. Show me some love. Give me your energy so that we can have an amazing rocking time. This session will also allow you to think and reflect and also kindle your thoughts, and probably you could see what are the things that you could apply in your business, right? You probably may have some of it already. If yes, then you can see how you could improvise on it and how you could maximize the performance of your business through your HR skills. So that's the objective. And my dear friends, if you have a pen and paper, go ahead, grab that on so that you can make your own notes. But if not, don't worry, because we will be sharing handouts to all of you at the end of today's session. So let me get started. But again, I would also like to give you the disclaimer because these are all the CFO's perspectives. Now, I'm wearing my CFO lens. I'm not a core HR person, unlike me, unlike my other core co-founders. So my perspectives are going to be from the finance angle, from a CFO's perspective, and as an independent director on the role the HR can play in making the business a rocking success. So that is my objective for today. And yes, you could also feel free to customize this for your business and your organization, because I'm sure each of you come in with different years of experience, different industries, different verticals, different business. So you could always go ahead and see how you can customize it for your business. So go ahead. Are you ready, guys? Let's deep dive and get started. All right. So I'm sure you all agree with what you see on the screen. People are our greatest asset, right? And that's what I love. Finance person, like I said, will only think of assets, right? And what else can be the biggest asset apart from your people? Now, like Shivani said, we at ThinkUniQ, although we are from the space of diversity and inclusion, we truly believe that the greatest asset any organization, irrespective of how big or how small, are the people. And therefore, how can the HR function contribute better to having better business outcomes? So that's going to be the key objective of today, like we said. So what are the things that we are going to be covering in today's session? And these are going to be your key takeaways, because we do value time, and therefore we have designed and customized it in such a way that you benefit out of this session. So the major takeaways for you is going to be, what does your management and your board expect from the HR team? What are the HR metrics that impact businesses so that you could deliver superior business results? And how can HR partner with business so that you could deliver better ROI, better return on investment? So that's the objective with which we are going to be approaching the session today. Are you guys ready? Give me a thumbs up, give me a yes, show me some energy, show me some love, and we are good to deep dive into what we're discussing. Yes, yes, thank you, Shalini. Yes, that's amazing. Thank you, Praveen. Yes, thumbs up, super duper. That's really nice. Let me start off with a little real life anecdote with a client of mine. This client of mine, a large corporate and promoter driven, and also I think they have more than 3,000 employees pan-India. They are into manufacturing. When I was discussing with this particular promoter what the business really wants to achieve and what are the goals, what is the purpose, what is the vision, you know, all what the promoter had to share with me. My business is here only to make money. And how is the belief there is, I need to make money by increasing my top line. I I only wish that in reality, it was as easy and as simple, because like your top line grows and you make more money. But my friends, don't we know how it is in the real world? And that is why, like Simon Sinek says, start with why. Why should your business have KPIs? Now, what is KPIs? I'm sure all of you know key performance indicators. So why should a business have KPIs? It gives you direction on how you can proceed further in your business. Otherwise, your business will be like a headless chicken all over and not be able to achieve anything concretely. And therefore, it becomes crucial for a business to have the KPIs. You're probably wondering, why am I starting with KPIs? Hang on and I'll tell you the link with our session today. Now, when we're talking about KPIs, what are the key business KPIs that your business needs to achieve? And that, my friends, should be in alignment with your vision, mission, purpose, and your goals. So the goal setting, like you know, it has to flow down from the top. What is the goals for the business? What is it for the departments? And then you drill down to the teams and then to the individuals. So you could have multiple different kinds depending on your business, your industry, your volume, and you know what really your business wants to achieve. So of course, the most common ones are, like I gave in the example, a super duper top line growth and profits. But apart from that, you could have a number of other things like the customer feedback, being debt free, being cash positive. You could want to have more number of branches, more number of locations, a number of headcounts, so on and so forth. And therefore, a great tool to do this will be your balanced scorecard, so that you could deliver the desired KPIs. Continuing a little bit on the KPIs, how are the KPIs being tracked in your business? What are the tools that are in place? To give you an example, what is the time taken for hiring? From vacancy to closure, what is the turnaround time? Is it possible for you to automate it so that the time can be reduced? Now, these are questions you could go back and ask in your organization, or you could just think and reflect to see what can be the best thing for your business. Similarly, how are the KPIs being analyzed? You do have some KPIs, but how are you analyzing it? Because your business decisions at the end of the day will be built upon the KPIs that are being analyzed. And therefore, linking the business goals to the individual KPIs as HR, how are you driving and how are you linking the two becomes something that's crucial. What are the gaps in the system? Is it that sometimes your teams are not able to perform? Is there an alignment issue? Maybe because individually they are high performers, but then as a team, they don't do well. So therefore, the goals become something critical for a successful Talent-O-Nomics for you to monitor and measure. Similarly, what needs to be done to bridge the gap and improve the KPIs? What are the actions that can be taken from the HR perspective is what we are going to be discussing further. So, how shall we proceed? I'm going to break this down into two. One is the process-related metrics. You know, like I say, HR creates a sensation. Sensation, yes, HR creates the sensation, and the process metrics that can be related with this sensation are through optimization, elimination, and contribution. So let me share a little more in depth about these three areas. So when I talk about process optimization, what is it? How is it? And how can you contribute? Before I proceed further, let me tell you a secret. You know what? I'm an acronym person. I love sharing acronyms simply because the recall value is much better. So the acronym you need to remember for your process is CAR, C-A-R. Easy, right? So I'll tell you what it stands for. First is your controls. What are the controls that you have in place? So before I even tell you about these controls, let me give you a real life example out here. There was a large multinational, a very employee friendly organization, and they realized, a lot of the employees were working after hours, after 7, after 8. Of course, this was the pre-pandemic time. And in order to help the employees, the company decided to give them all a dinner allowance. So anybody who stayed back after a certain time, probably let's say 7 o'clock in the evening, were entitled for a dinner allowance. So some of the people used to finish work by about 6:30, 6:45. They decided to stay back to get the dinner. It didn't stop there. They went ahead and started ordering food for the family and friends, and all of them started having a good time. Some of them went even a step ahead and started ordering food from expensive restaurants. Some of them just went ahead and ordered if there was like no tomorrow, and this just went on. And of course, where is the impact felt? In the bottom line of the business. Now, the reason I'm sharing this example is, this is such a gray area. And one side you say, I'm going to give you a dinner allowance, which is great. But if you do not have the necessary controls in place, it does not help the business. And therefore, it's essential that you set, identify firstly, what are the gaps? Now, you want to give them the dinner, but at the same time, if people are not clear and sure about this, these are all gaps that exist in the system. So what are these gaps? Identify these loopholes, right? And then see if you can fix responsibilities and the accountability. Because, if you were to look at the swim lane, the roles and the responsibilities with the ownership needs to drive the right decision making. What are the duties that need to be segregated? Is there a role conflict that exists? And because you need to ensure there's no overlap, and therefore the roles need to be defined clearly. Is there a maker and checker concept? Is there a possibility that maybe after today's session, you could go back and do a self-audit and then see what are those gaps? How is it you can ensure better internal controls? How can you put things in place from a process perspective? Now, this is just an example, but I would like to get you thinking from the controls perspective. So what did I say? CAR. So the first is the controls. Second, let's talk about the approvals, right? Now, for anything in place, you need to have an approval. And therefore, the delegation of authority, who has what authority in the organization, who can approve what, up to what limit, and therefore essential to define the authority matrix. Similarly, are they just, having multiple rounds of approvals? What are the levels of approvals? Now, let me share this small example. I would like to talk about the Chennai airport. When you're traveling outside of Chennai, at the airport, at the entrance, is somebody checking your ID proof, and then at the ticket counter, and then at the security check before you, they check you, and then before you board the flight. And, it's the same thing that gets repeated umpteen number of times, and that is just wasting your efforts and time. It is not being productive, right? So go ahead, see if you can simplify the process. Maybe you have the right approval limits. The time taken, the delays that it's causing, is there a way that you could simplify them? And most importantly, the communication rollout. Now, all this could be existing in the system already, but hey, are your team members aware of this? So go ahead, ensure that the communication rollout is happening. What does the R stand for? The R is the resource management. Now, this is a very subjective area because I know in not all organizations, the HR is involved in the resource management, but a lot of the IT segment, quite involved in the resource management. And therefore, from a controls perspective, you could probably be thinking about, is there any delay in billability that it's causing, right? Because again, let me share another small example that I know where a particular resource. There was an opening and it was a billable resource, but the time that was taken to put the resource in place actually resulted in loss of revenue for the business. So what is the time to replace the resource? Are you tracking your resource through a resource tracker? Are you allocating the resource according to the projects? Are you tracking the time taken per project? And what about the bench strength? The bench resources, how are you managing time? And your idle time and so on, those come under the resource management. So those three are from the process perspective, the car, the process optimization perspective, the controls, approvals, and the resource management. So guys, are we okay? Are you following me? Am I too fast? Am I too slow? Any doubts, any questions? Save it up and we will be answering them for you towards the end of the session. So what did I tell you in the beginning? Optimization, and then I spoke about elimination, right? The leakages need to be eliminated. So if you were to look at leakages, I would broadly classify them into three types of leakages: financial leakages, statutory leakages, and the brand leakages. The brand leakages could be in terms of volume, in terms of revenue loss, or in terms of loss of customer engagement, apart from the reputation loss. So what can you do from a HR perspective to plug these elimination of leakages? So again, I'm going to divide this into three parts. And remember PPP, right? So what are the three Ps? The first thing, any guesses? Anybody wants to take? Yes, thank you, Praveen. Anybody wants to take the first P, which is payroll, right? All right. So what about the payroll? What can we do there? The most common thing, employee tracking, right? Because there could be ghost employees, for instance, and the payroll could get duplicated. So what are you doing to eliminate the ghost employees, right? So you could probably have some sort of checks and balances in place, for example, to reconcile your timesheets with your attendance and billability, right? So you could just have to go around looking what is it you can do from the payroll perspective. What about getting the correct approvals with the right person approving it, right? How are you going about that? What about duplication of data? Let me share another example out here. So some employees were entitled for a referral bonus, and the organization scheme was such that they get 40% of the referral amount in the first month and the 60% in the subsequent month. But you know what was happening? First month they got 40%. Second month they were getting 100% instead of just the 60%. So there was a lot of duplication that was going on. Continuing with referrals, what else was happening in a particular organization I knew of was one resource, a referral was paid, and also an external consultant was paid because both of them had referred. So what are the systems that exist in place so that these sort of duplications can be avoided, right? So that's why I keep insisting on the checks and balances that need to be in place. To be short, your payroll needs to be defect-free, delay-free, and deviation-free. So remember the 3 Ds: defect-free, delay-free, and deviation-free. So what is the second P that we could look at is a performance. Yes, we will come to that in the metrics. Good thinking, Praveen. I like that. Okay. Yes, the second P is the payments, right? So HR and payments, yes, let me explain. What are your internal processes that exist for, let's say, empaneling your vendors? What is the process to raise a purchase order? What is the process for your approvals? How do you do it? How do you qualify a vendor? Do you check the reputation of the vendor? Do you do a background verification of your vendor? How do you validate the services or the product that you're procuring, right? So these are your internal processes that you need to streamline from a HR standpoint. Similarly, what are the supporting documents that will substantiate your payment, because once you clear it before giving it to the finance department, you could probably ensure, you have a valid invoice with the right name, date, value, volumes, your GST and stuff like that. Similarly, if it is you're dealing with an MSME vendor, right? There is a particular time frame. You need to pay your MSME vendors within the time frame, else you get thumped with the interest cost. So therefore, you need to keep a tab on that. And of course, like I mentioned earlier, the duplication of payments needs to get avoided, right? So you need to see what are the processes in place with regards to your vendor and the payment process, so that you can ensure there is no leakages in your business. The third P, what is that? That is about your productivity, right? What about your utilization levels? How are you keeping a tab on that? Like I said, productivity may or may not be under HR, but assuming that in your business, productivity is part of the HR process, how are you managing the utilization levels? Is there a benchmark that's being set in your organization with regards to productivity? And if yes, what are the gaps against that? How many resources are actually billable resources? Do you have any rework costs? Because that is also going to pull it down. You have measures, like how are you measuring the productivity for each project, if you are especially in the IT segment? If you're dealing with machines and if you are in the manufacturing segment, what about absenteeism? How are you measuring that? How are you measuring people who abscond, especially if you're in a BPO or a KPO setup? How are you measuring that? So these are some food for thought for you. So though these are the 3 P's, right? Your payroll, payment, and productivity. So remember that when it comes to your elimination. And then, what did I tell you in the beginning? Optimization, elimination, and contribution. What do I mean by contribution? Profit contribution, right? Because I always believe this. One of the core reasons a business exists is to make money, else you might as well do charity. And I know the past year has been really stretched for a lot of businesses, and we know the reasons. So all businesses are actually wondering, where is the moolah? Where's the moolah? Where's the moolah? Do you know? Do you know? It's hidden in your business, in the wheels of your business, that you should hack for profits to grow. The profits that you want. It's all there within your business. Now, this was my latest book. It's called Where's the Moolah, where I have divided the business into different business functions, and HR is a key function. So I've been talking about what are the things that each business function can actually do to contribute to better business profitability. So of course, from a HR perspective, first thing, you can contribute to the cost savings. How is that? Let me share a small template out here for you. Now, if you were to kind of analyze your HR costs, right? Tabulate them. Apart from, of course, your salary costs, because salary costs, you probably may not have much say. Now, in this particular example, in this template that I've shared, if you were to look at, let's say, the HR compliance costs, it amounts to about 5% of the total HR costs. Now, how do you justify that cost? You justify because you say this cost is required because the business needs to be compliant with labor laws and other applicable laws, which is true. So you can't do away with this expense. But then what sort of action can be taken to minimize this 5%? So from a HR perspective, if you were to think about it, currently, and this is an example, so you could say that this is the compliance is being outsourced. But if this can be absorbed internally, then the costs can be halved. and only the legal opinions can be outsourced. Now, this is a strategy that you need to come up with to ensure better profitability. Similarly, let's say if you were to analyze the bench cost, which is about 3 to 7%, and it varies depending on the number of people on the bench, and that's unavoidable. However, you feel there is a scope to reduce it. So what can be done to reduce it, let's say between 2 and 4%? So you feel that by planning it better and allocating the resources, this you will be able to bring it down from 7% to, let's say, 4%. Similarly, on recruitment costs. So say, let's assume the company is on a growth spree and therefore the recruitment costs will be required. But let's say you want to encourage referral, right? And ensure that you're getting more internal referrals and minimizing your external consultants costs, especially for the junior positions, you would probably be able to bring down this particular cost. So this is just an example and a template that I have shared with you. This will also be there in the handout that will be given to you. So the idea is for you to think, strategize, and plan accordingly so that HR can actually contribute better to better profitability. So that's what I wanted to share on the savings. And apart from that, of course, yes, you could also set your benchmarks, right? You could compare your HR numbers, let's say with the previous year, the previous period, or even the previous month, depending on the nature of the HR expense that you're analyzing. Of course, you also need to have strong negotiation skills with your vendors so that the best comes out, and you should also highlight the savings that you've made as against your budget. So these are some areas you could contribute with regards to the cost savings so that there's better profitability. The other thing that you could do, which many people probably tend to miss, is the fact that time is also a cost. Yes, time is invisible, so many times we do not take that into account. But since time is a cost, what can HR do to contribute to better profitability? Minimizing the time. It could be with your vendors, it could be with a new hire recruitment, because you need to see, because of these delays, what is the impact on the profit? Now, if you start thinking finance and numbers and profitability, then you will automatically start getting answers to some of these. And therefore, start thinking on what can be done to minimize the time and minimize the delays so that the profit is a lot better. Another thing that you could do is cost benefit analysis. Let me share a little example out here. In one of the organizations I knew, there was a ready place for a billable resource. The new resource was identified and was ready to be onboarded, but like we know, the resource had about 2 months notice period. Now, if the HR out there could have thought from terms of profitability, they could have just, done a buyout of this particular resource and ensured the person joined, because the billability would have started to tick. So that's why I say do a cost benefit analysis. This is just an example. So you could see how you could apply this in whatever role that you're playing in HR so that you could contribute to better profitability. The other aspect is the risk of non-compliance. The cost of non-compliance is really high and it's not worth it. Not just the cost aspect, we also know it could have legal repercussions. And therefore, it's not worth it to compromise out here and might as well stick on to the time frames and the deadlines. So that is why I keep insisting that time is also a cost. So till now, what we saw was all your process metrics. From here, let's look at the people metrics. I'm sure a lot of you already know this and you're probably already implementing it, right? But I'm just sharing some of them with you. You may know it, you may already be following it. If not, it's time you get these incorporated and check these out. And of course, I'm trying to make it as generic as possible, and you'll have to see how you can customize it for your business. So what are some of the key metrics? If I were to broadly classify them, what are some of the recruitment metrics that you need to look at? For instance, what is the cost per hire? What is the time to hire? What about the pipeline of resources that you may have? So these are some of the examples of the recruitment metrics. Then comes your WIAH. Any guesses? Do you know what it stands for? What is this WIAH metrics? Why I am here metrics, right? So from an employee perspective, what is it? What are the things that, some of the things that you could look at? What is your ROI on human capital? What are the training expenses per employee? What about your employee demographics? It could be your diversity and inclusion. What about the age, the gender, the education? What about the length of their service? Which city do they come from? So on and so forth. You could also compute metrics such as salary cost per employee. What is the total cost per employee? What is the revenue per employee? And even the profit per employee, and the profit per employee could be per billable resource and also for the total FTE, which is your full-time employees. What about the overtime costs? Also, you could check at the employee productivity index. What is that telling you? What about the man hours that's being spent for knowledge transfer? What about the learning curve? You know, the internal customers of HR are your own colleagues within the organization. So what is the employee satisfaction score, or the NPS, the Net Promoter Score? Internally, you could measure that. What about the employee retention rate? Maybe you could compute that per manager or per department as well. What about the human capital value added? You could check that. You could also compute the absenteeism rate, right? So these are some metrics, you know, which you hopefully sets you thinking on this WIAH, why am I here metrics. And then of course, you have your attrition metrics. So just to give you examples again, what about the employee churn rate, right? You could measure that. What is the average employee tenure within your business? How are you measuring the contributions of employees who have left the organization? Regarding your attrition metrics, what is voluntary attrition and what is involuntary attrition? Have people been making informed choices? What are the exceptions to attritions? It could be, for example, somebody had to, you had to ask them to leave. Could be an ethics or an integrity issue, or probably it was even a loss of life. So these are some exceptions to your regular attrition metrics. So you could classify these how you want for your business and keep measuring them. And then you can also look at the business HR metrics. So what does this talk about? Just to give you some examples again, what is the number of HR professionals, the ratio to your employees? What is the cost of HR per employee? What is the return on investment on your HRMIS, right? So you could probably compute that. So these are different aspects of business that you could probably look into. And of course, over and above all of these, like I told you in the beginning, you could customize your metrics, customize it to your business requirements. You know, look at metrics that makes more meaning to your business. If you're an asset heavy business, for example, you could customize it from an asset perspective. If you're a manpower heavy organization, you could of course look at it from a manpower angle, right? So just to give you an airline industry. So here, the rate of the passengers in relation GRO or the ground relation officers are required per passenger. So you could come up with graphs like these. Similarly, if you were to look at the flight officer, you know, what is the flying hours per flight officer? is there a way you can do these ratios better? So what sort of processes and controls that you would like to bring about? Similarly, what is the ratio of passengers to the driver, right? So these are all metrics that you could actually start measuring and customize it exclusively for your organization, because that's when it will add a lot more meaning to you and to your business, and you would be able to highlight the key aspects to your board and your management. So if I were to summarize, some of the key aspects that you need to remember is setting and aligning of your KPIs. Like I said, from the business to your departments, to the teams, to the individual level, and the HR has a key role to play out here. Of course, you could also highlight how HR is contributing as a business partner and facilitating better decision making within the organization, because these are all key metrics, and when these have been shared with the respective decision making authorities, then it opens up different perspectives, different thought processes, and they would be able to take the best decision for the business. What about the competition? Are you tracking your competition? Are you analyzing those numbers? And if yes, you must be sharing that as well to the board and to the management. And of course, you also talk about how HR attracts the right resources at the right time and retains them, by ensuring they are having a high morale, they are having, good satisfaction levels, and they are highly motivated. And most importantly, how HR is managing the costs effectively, and therefore the productivity and the performance, how it is at the peak, and how you are actually enabling to bring out and maximizing the potential of each individual employee. Now, you probably, leveraging on their strengths, leveraging on their diversity, or, just by ensuring that you're including them and, everybody's included, and building that inclusive culture in your organization, you can be a key differentiator out there. So that is what I really wanted to share with all of you. So my friends, I would also like to tell you that these are my books that Shivani mentioned, and what the Finance is a national bestseller. Get High is how to coach yourself for high performance. So if you would like to, give that to your employees, that would be great. And of course, I spoke to you about Where's the Moolah already, and I'm happy to connect with you all on LinkedIn and other social media. You can find me as the Game Enabler, and do visit our website, which is ThinkUniQ.com. So now I would like to hear from all of you. What are your key takeaways? What is it that you are planning to implement in your business, and what really stood out for you in today's session? And of course, if you have any questions and answers, I'm happy to answer them for you. So please go ahead, post them in the chat box.
Okay. As I think we'll just give a couple of...
Yes, in case somebody has a question, you could raise your hands, and I will request Avishkar to unmute them. So any doubts, any questions, please go ahead and feel free to ask me. Yes, Saurav seems to have. Saurav, you could post it in the chat box, or Avishkar, can you please unmute him? Yes, Praveen.
I have done that.
Yes, Saurav, please.
Hi, my question is what is human capital value added?
Right, that's a great question, Saurabh. So human capital value added is an indicator, it's a measurement of your profit of an average employee that employee is actually contributing to an organization. So there is a formula to compute that. What it is the difference between the revenue and the non-employment related costs, and you divide that by your full-time employees. So that will give you, it's an indicator, like I said, how much profit is generated, and what is the value that's been added by the human capital. Thanks.
Okay, thank you. And I have one second question, how to compute human capital ROI?
Yes, great question again. So that is nothing but take your revenue minus the non-human capital expenses that you have, and divide that with your human capital expenses. So, that will give you the ratio, and that will tell you what is the ROI that you have on your, the return on investment on the human capital.
Okay, so basically it is expressed as a ratio.
Yes, that's right. ROI is a
Oh,
ratio or a percentage. Absolutely right.
absolutely. Okay, thank you.
Welcome. Anybody else? Any other questions? You could, yeah, you could also post it in the chat box, or you could unmute yourself.
Questions, reactions, I think we'll be happy to see them.
Yes, please also share what is it that you're planning to incorporate in your business, in your organization, and what are your key takeaways? What is it that you really liked about the session? That will encourage us to come up with more sessions for you. We already have planned few things which Shivani will be revealing to all of you.
I think Venkataraman has, Avishka, we'll have to unmute him.
I've done that.
Yes, Venkat.
Venkat, you will see an unmute button in front of your screen. So if you press it, you will go on unmute.
He's not allowed, he's saying.
Yeah.
Okay, Praveen says, I like the process optimization part. I use SCAR technique in my organization. Awesome, Praveen. That's really nice. Where do you work, Praveen? Venkat, are you still not able to unmute yourself, because we are asking you to unmute? So
maybe he could just type,
Eagle Press Group. Thank you, Praveen. That's really nice.
Venkat, if you're not able to unmute, you could just go ahead and type.
Yeah, please go ahead and type, Venkat. Sorry about that. Not sure why. Anybody else? Any other questions? Any other doubts that you may have? Very, very silent group, I must say.
So I remember when I was, okay, so I think Venkat is.
Yes. The list of metrics is so long, absolutely right. When the process becomes so lengthy, and can't there be a burnout for HR? Yes, so you'll have to, very carefully pick out the important and the key metrics for your organization. And it's not that you have to do everything. So whatever is important, you need to look at them and see how you can, implement them in your business. Whatever makes more sense to your business, you need to pick them out. Of course, we don't want HR to be burning out because of this. Thank you. Okay. Anybody else? Venkat, where do you work? CIC, okay. Nice.
I think we're well on time.
Yes, that's
And
amazing. Yeah.
yes, people.
Yes, yeah. We are assuming there are no more questions, guys. But if there is anything later on, please go ahead and you could always reach us. Maybe I would request Avishkar or Shivani to share the handout to the participants. They've been amazing audience, showing so much of love and energy. I really love them. So it'll be nice if we can share it with them in the chat box, and they could download that and refer to it when required. It has a lot more details on the metrics as well.
Sure. I think, I would want to share something with my HR colleagues here as well. Let me tell you, the moment I stepped into the HR role, and especially the CHRO, the first thing that I was told was that, who will be your best friend at work? And I was like, let me think. One of my mentors told me, if you have to be successful in your career as an HR professional, your best friend has to be your CFO. And which is where, we were very much convinced that while all the HR professionals get to hear in every forum, what are the key HR metrics from HR professionals, it is very, very nice for us to get that perspective from our best friend, the CFO, right? So which is where, and our CFO's been gracious enough to sanction the car to all of us. I'm hoping you all remember and recall the car model that she spoke about. So she's sanctioned the car, which all of you can ride, but make sure you do it safely. Right. So on that note, I think we would, all of us at ThinkUniQ Solutions would like to thank each one of you for taking out time and participating in this session. We loved to host you. And like Sangeeta said, there are many more sessions lined up, for you. The second one being a session on diversity analytics, which will be facilitated by David Krillman, one of the top 5 global experts in people analytics. It'll be held same time on 15th of January. And we all will be very, very happy to have you as a part of the session. The invites will be sent out shortly to you. And just to reiterate, again, like I said, we're a young organization. We're all committed and very passionate to partner with organizations, to partner with leaders, to partner with the entire HR operations fraternity in the DEI journey and make organizations a lot more inclusive. So thank you so much. Please make sure you follow us on LinkedIn so that you are tuned on to what we are up to. There will be a lot more coming your way as well. And your feedback, your suggestions will only make us improvise the sessions coming your way. So thank you so much.
Yes, thank you all for being such amazing audience. Avishkar has shared it. Yeah, I think he's sharing it again. So Venkat, yes, you could download it. Thank you, Debashish. Yeah, so nice that all of you were there and joined the session. And yes, happy to connect with all of you. Follow our LinkedIn page and do join us for the next session because we love to share knowledge in this space. So thank you, Shalini, and thanks to all those lovely comments in the chat box. I'm so delighted to know that all of you enjoyed. So stay in touch and wishing you all the very best of financial high performance in your business. Thank you, Meera.
Thank you.